Hey. If you have not started investing, what in the world are you waiting for? It is time. It is a new year, 2021, and you are still not investing. This is a tutorial for you. I'm going to get you started and let you know everything you need to know. What is going on? Welcome to the Flaming Profits YouTube channel, where we teach you how to become a profitable investor. We cover all sorts of finance related topics, so if any of this interests you, make sure you hit the subscribe button and like this video before we get started. You definitely do not want to miss out on any of our amazing upcoming videos to improve your financial life. Here we know that a wage makes you a living, but profits make you a fortune. That is why we put a lot of emphasis in making profits through different avenues such as stock market investing. Alright, and before we get started, I'm going to give you the opportunity to get 3 free stocks, 2 with WeBull and then 1 with Robinhood. These are brokerage platforms that you'll begin to use when you get started investing, and when you sign up with the links that I have, they're going to give you absolutely free stocks. I've done all of these and I highly recommend for you to do them. It's very easy. And then M1 Finance, another brokerage I'm going to show you, they're going to give you $10. And then my favorite, the Discover Secure credit card to help improve your credit score, they're going to give you a $50 sign-up bonus. If you have any questions, let me know, but all the links are in the description. Okay. So the fact is that it's one thing to work to make money, spending your time. The second thing is making the money that you already have saved to work for you. Did you know your money is a better worker than you? Your money has the ability to make more money, and it's much easier, I guarantee you that, for your money to make more money. So you might wonder, how do I make my money make more money? Well, that's exactly what I'm going to show you. Let's get started. Alright, so I divided this, sorry for my cracky voice, I guess I'm still going through puberty. But yeah, so let's divide this into 2 parts, part 1.5. This part is going to be automatic investments. Okay, so you want to set up automatic passive investments. These are investments that are going to make you money no matter what throughout time. And it is very easy to do. All you have to do is set it up and automate it, and it will do everything for you. But you have to make sure you take the time to learn exactly what these investment instruments are in order for you to be successful, because it's more important for you to know what you're doing than just setting up something that you don't even know what it is and how it works. So first, you have to be doing your 401k at work if your employer offers a 401k up to the company match. And if you don't know what a 401k is, I recommend you to investigate this and find out what it is. But you need to set that up and set it up so that you get the full match that your employer is giving you, because it is free money that the employer is giving you for you to be able to invest. So at my employer, I put in 6% of my paycheck, and they give me a 9% match of my salary on top of the 6% that I invest. I have to invest the 6% in order for them to give me the 9% match. So that is step 1. Set that up so that 6% or whatever the amount is to be taken out of your paycheck automatically into your 401k. And I recommend a Roth 401k. There's different types of 401ks, but I'm not going to go in depth into this video in regards to what it is exactly, because I just want to cover the basics and then you do the rest of the work. The reason why I recommend you starting with your automatic passive investments is because your automatic passive investments will allow you to save the maximum amount of money from taxes. So your Roth IRA will save you from paying future taxes whenever you're ready to retire. Your 401k usually saves you on paying taxes now, so the money you're depositing into your 401k will be pre-tax, which will allow it to grow faster. But you can choose Roth 401k as well, which is the one I recommend. And then the HSA allows you to save on taxes 3 different ways. I know that this may sound a bit confusing, but that's why I'm saying do your own research when it comes down to opening up these accounts first. That way you're well educated. Next is your Roth IRA, which the government only allows you to do $6,000 per year, which will be equivalent to depositing $500 every single month from your paycheck. So I would encourage you to do this because the passive investments will allow you to save the most in taxes, which is very important. I will prioritize investing into funds or investments that don't require for you to pay taxes now, because in the long run, taxes are going to be a huge part of how much you actually get to keep. So make sure you do your 401k and Roth IRA, $6,000 per year. So the 401k is basically like a long-term retirement account that you're going to be able to use once you're 60 and ready to retire. This is a great idea because you don't want to be working for the rest of your life, so you might as well. And you might have more options later on because you have that sitting on the side. So in case you're in some sort of emergency, you always have your 401k money for you to use and your Roth IRA. And then the HSA. So this is a health savings account. So whenever you get sick or have any healthcare expenses, if your insurance doesn't cover it, you can use your HSA to basically pay for that expense, but it'll be tax-free with that account. And this account, you basically put a set percentage of your paycheck into the HSA, and it allows you for you to invest whatever money you have sitting there, while also being able to spend that money on eligible healthcare expenses. It's a great idea because you're getting money tax-free that you're able to spend tax-free, and it's able to grow and compound over time tax-free. So you have tax-free savings in 3 different ways. Healthcare expenses might not seem important for you at a young age, but trust me, as you start to age, there's healthcare expenses that will increase dramatically, and you don't actually know what it's like to pay a healthcare expense until you have to, which they can be insane. Let me just tell you that healthcare expenses can be probably the top 2 or the first most expensive thing that people pay for. So investing is done first, then other expenses. Keep that in mind. That is why you should automate your passive investments, because that way you get investing done no matter what. It's not something that you forgot to do or something like that. It's always done first, and then whatever's left, you can choose to spend it on whatever you want. Next is when you automate, you don't have to worry about it investing. It gets done automatically. So less stress in your life is always better. So make sure you automate it. There is no room for errors when you automate passive investments. So that's part 1/2. Trust me, I know this seems like a lot of research that you might have to do if you don't have these accounts yet. But once you have everything up and rolling and you set up the automatic transfers every single month, you're basically already doing better than most people. And trust me, you want to get started investing as soon as you can, because the sooner you start investing, the more time you have. And the greatest factor to getting higher returns in the stock market is not choosing a specific stock or fund. It's about how long you're in the market. The market tends to go up over time. So if you're in the market for longer, you'll enjoy much more returns than most people. That is why it's very important for you to begin and stop making excuses. This is the year that you will start taking this seriously and learn as much as you can. So now let's talk about part 2. Alright, let's go, part 2. So if you are already doing all of part 1, you're probably not doing part 2. And this is taking everything to full power. So putting the pedal to the metal, as they say. So part 2, this is what you have to do in order for you to be really well off eventually later on. So not only just do part 1, but do this as well, because this is gonna finalize everything and make sure you're set. So part 2, it's gonna involve setting up a brokerage account. So you can do this with Robinhood, you can do this with M1 Finance, you can use this with WeBull, and I'll have all the links in the description so that you get some free stocks and free money as soon as you get started. But the brokerage accounts, this is what you'll need in order for you to be able to buy and sell stocks. So I recommend you to do this with M1 Finance because it makes it super easy to get started. So M1 Finance has a thing called a pie. So basically how it works is you pick individual funds or stocks that you want to compose your pie, and then you can set percentages for how much of the pie you want a certain stock, a certain fund. And the way I would recommend you to structure this is to use 25% of your pie for ticker symbol VOO, which is the Vanguard S&P 500. This is an index fund that tracks the top 500 biggest companies in the United States. which usually has a very high ROI, and it's also very safe because you're not relying on one individual company. You have 501 fund, which is very secure, and it will allow you to get really good returns that way. So I would set that for 25%. And then the next step is finding strong individual companies who have a good balance sheet, and they have to have an uptrend pattern on the max chart. So for example, take a look at Google's chart or Facebook's chart or Apple's chart on the max chart on Yahoo Finance. Just look up Facebook stock and look at the max chart. This will show you the whole history of the stock since it started in the stock market to where it is now. And you'll realize that it's uptrending. It seems like it's always making a higher high. And this should take up 75% of your portfolio. So once you have the 25% belonging to VOO, you're going to choose other individual stocks to compose the rest of your pie. And let me show you how you do this exactly. So here I'm opening up an individual investing account with M1 Finance. And they make it super easy to do, so I highly recommend you. And if you use the link that I have, you're going to get $10 for free that you'll be able to use automatically in the beginning when you first start your portfolio. So this is where you'll be able to pick the individual stocks and add them to your portfolio plus the VOO into your pie. And then once you have your pie fully set up with all the stocks and the indexes that you want, you're gonna set up an automatic transfer. So this can be $100 to $200 every single month that you add to this portfolio. You'll start seeing the gains as you see it every month. You will start to see your money grow throughout time as you start to put in more money. And then most of the stocks pay you dividends every single 3 months. And that will add to your portfolio value. And then it'll automatically reinvest all those dividends back into more stocks. So if you continue to do this for, let's say, 10, 20, 30 years, you're gonna have a huge amount of money on the side. And this is how you invest for the long run. This is how you can ensure that you have a bright financial future. And it is by taking matters in your hands. So you have to take action and learn about the passive investments that I talked about in part 1, and then have to set this up in part 2. And trust me, the sooner you get started doing this, the more money you're gonna have in the long run and the bigger gains. So just add stocks that you're comfortable with, that you actually understand, and that you know what they do, and they have an uptrending pattern on the max chart. Pretty much every single stock that I'm picking here is because they follow all the criteria that I choose for individual stocks. But you're also pretty safe because you have the Vanguard S&P 500 composing 25% of your portfolio. Plus you have all sorts of other investments like your 401k, Roth IRA, and stuff like that. And I do recommend for you to choose to invest in the S&P 500 in your 401k and Roth IRA. This will allow you to not have any insane expense ratios from a managed mutual fund that you might have initially, and it'll allow you to get the highest return possible. But as you start to age, you want to have more bonds in your portfolio than stocks, because stocks they fluctuate more, and if you're close to retiring, you don't want all the money to go down significantly when you're ready to retire. So you want to make sure as you start progressing to closer to retirement age, you do want to have more bonds and less stocks. But just leave it as it is for now. You still have a long way to go. So yeah, just adjust the percentages so that it all fits under 100%. So you'll have 25% in Vanguard S&P 500, and then the remaining in whatever stocks that you want to invest in. Once you're done with this, make sure you save your portfolio, and there you go. You have your pie ready to go with the correct percentages that you need. And then just set up the automatic transfer every single month. And this will set you up for a bright future. So that's how you invest. Do the part 1 and then proceed to part 2. And if you have any questions, feel free to let me know in the comment section down below. Alright, so there we go, subscribers. That is how you can ensure that you'll have a bright financial future by taking the steps that I mentioned in order for you to get started investing. Make sure you take action now. Do not put this on the side and wait and just don't take any action. Make sure you take action now. So start learning what you need to do. Take your first step today after watching this video. I highly recommend for you to get invested. I'll see all of you in the next video. Peace.